Let's talk about shorting stocks going into earnings here. This is one of those things about swing trading and stock trading in general that I just don't understand, because traders like to try to get ahead of a big move. Even if they don't know what that big move is going to be, they still like to take a side. And when it comes to earnings, you don't know how a stock's going to react. You simply don't. So when it comes to earnings, there's good numbers and bad numbers. There's bleh numbers, I guess mediocre numbers. But then there's also the reaction, right? So even if you have a good numbers, doesn't mean it's going to have a good reaction, and bad numbers doesn't mean a bad reaction. In fact, you can have bad numbers that are below street estimates, and yet you get a positive reaction out of it. And that's part of the craziness of earnings. So even if you had the numbers handed to you in advance, there's still a good chance that you wouldn't know how to play those earnings correctly. So I tell people, don't play the earnings. I don't play the earnings. Now, it's different if you're trying to hold a stock for 5-10 years or whatever it is, a long-term perspective. Then yeah, in order to do that, you have to hold through earnings. But you're also not trying to get out based on what one individual earnings report's going to do. But when it comes to trading, an earnings report can be cataclysmic to your trading performance. So first off, don't trade earnings, okay? Trade after earnings. So you get Amazon here where it was trading, in the low 14s, 14.15 or so prior to just a couple of days ago. And then it makes this huge run up into like 15.30 or so. And a lot of people are already thinking, okay, I'm going to get short because this thing is running way too much ahead of earnings. It's going to be a buy the rumor, sell the news kind of event. But the earnings comes out and we're hitting new all-time highs again in the almost mid to 1600s there. So how do you play this? Well, if you're bent on wanting to short a stock, okay, or short a big name going into earnings, whether it's Apple, Amazon, Facebook, Intel, Boeing, one of these really big names, NVIDIA, don't do it beforehand. Wait till the numbers come out. Take the mystery out of what the stock's going to do. Because here, all right, so Amazon had blowout numbers. If you want to get short on the huge pop higher and then fade the move, okay? Now, you may not be right. It may gap way up like it did this morning, but just keep on going higher. But at least you're not stuck in a position after hours and you're getting creamed by the street's reaction. The reaction is already baked in at this point, and you're just trying to see what the stock's going to do thereafter. And okay, let's say you faded Amazon right at the open today, 1634. You can be covering right now at 1572. So there's about more than 3% in profits that you could have right from fading that market move. Now, it may not be a 10% or a 20% move like a lot of people are hoping to get from earnings, but I can tell you this much: a 3% profit is a whole lot better than getting burned on a 10% loss. So if you can have the 3% profit under less risky conditions, then do that. That makes sense to me all day long. And you can pull up other charts here. Intel, INTC is another perfect example. You could have faded this one today. But if you would have shorted it into earnings or gotten some put options or bought some put options, look, you're getting torched there. And you could have been forced to panic sell or get taken out at your stop loss at the open. So it's not a good situation. You're better off waiting until after the earnings report to make your move. And let's say it gaps down, okay? And let's say that you were right. Intel reported bad numbers and it's going way down and you missed out on the move. Well, you can still short that too, okay? I mean, there is the possibility that the stock gaps lower and keeps on moving lower, or that it moves lower and it starts to move back higher and you can buy that bounce. If that's your thing, if you like playing the earnings, it's better to play them afterwards than trying to get them beforehand, because you have no edge going into earnings. You have absolutely none. You're just taking a wild guess. You might be able to justify why you think it'll do something or whatnot, but you have no way to know. Another great example, Facebook, okay? This stock surrounded by bad news, going in front of Congress, having to testify, having issues with user data being compromised. This stock had every reason to go from, this 160 area it was at right before its earnings all the way down into the 140s. What did it do though? It goes up into the 170s. The 170s. So you're getting torched on that one too. So don't try to play these earnings. I'm telling you, long term, you will get burned on it, okay? You have to have a pure edge in it to be successful in the stock market, and the earnings will not give that to you. So don't do that.